Happy Friday out there to everybody. This is Dan Frio, the Mortgage Update. Of course, I'm Dan Frio. And what's going on today? Honestly, I don't know. And nobody can really put their thumb on what's happening other than just volatility in general. The uncertainty about the tariffs in China and what kind of ripple effect that's going to have throughout the whole world. Because the data out today was actually really good. What we saw today was the biggest factors today was inflation. And the standard inflation gauge, producer prices, they were up 0.2% for the month of July, which was right in line of what everybody expected. Year over year, it is that measurement is up 1.7%, so that's in line. And then when you look at core inflation rates, what they do is they strip out food and energy. That's one of the big things that a lot of people watch because food and energy could be volatile, real volatile, and week by week, day by day. And the expected number to come out was an increase of, again, the core inflation number of up 0.2% for the month of July. Well, in fact, it was actually down 0.1. So that brought the overall year over year inflation numbers from 2.3 to 2.1. And the Fed's target rate is actually 2.4. So we're well below those figures. So, inflation's intact. The markets are okay. Why we had a huge sell-off in mortgages, I don't know, but let's get to the charts. Today's chart. So here's what we watch. This is what's called the mortgage-backed securities market. So anybody that follows my channel, we monitor this on a daily basis. So if you're really interested in this, you got to kind of pick up at the beginning. But let's go through it real quick. This is mortgage-backed securities. And what mortgage-backed securities, those are exactly the instrument that controls interest rates. Okay, so probably the best way to do that, to learn more about that particular tool, is just Google mortgage-backed securities. Okay, basically it's a group of bonds that trades on the stock market or in the markets. So this is the price of bonds. So let's just try to get a 25-day moving average for anybody in the charts. And if you're not in the charts, I'll explain this. So this is what's going on with the prices of the bonds. So what happens with bonds is the higher the price goes, meaning people are paying more money for a bond, the yield or the interest rate on that bond declines. So it's an inverse relationship. It's reversed. Okay. So what we want to see here is uptick. We want the prices of the bonds to keep going up, in which we have kind of seen that, right here. We've kind of seen that. All right. But there's also, what I try to explain is in all markets, unless you have that little hiccup. And what I mean by hiccup, if you have, the China tariffs was kind of a hiccup. Nobody kind of expected that news to come about or that extreme. If you have maybe a terrorist attack, you have some really bad news, or Trump just tweets something crazy and makes the markets go nuts. Most of the time, everything will trade in somewhat of a pattern, So what we try to do is we try to watch some patterns. So one pattern we kind of watch is what's called the Fibonacci levels, which that puts a floor and a ceiling on things. So right now, the Fibonacci levels are telling us we should be trading between this range, okay? So what happened is we hit actually the line was about here not too long ago. Then it moved to here where you see it now. So when we saw this going up and we hit this level, I started locking a whole bunch of people. This was a great day. You can see we had a big bump here. I locked some people. We missed out on this little bit of move right here. So you might have saw in this range maybe 0.25%, 0.1 to 0.2% loss or increase in rate or decrease in rate, whatever which way you want to look at it. My clients on here might have gotten, we might have locked at 4, but they might have been able to get 3.875. So not a huge variance, but a variance. And my goal is, and again, what I try to say on most videos, almost all videos, what do I do different for you? Basically, I am your mortgage advisor. I'm not just an application taker and say, okay, we got your application in line, let's throw it in. You're approved at this program, I think. Yeah, you're good, and I'm locking you in your rate. No, I do much, 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 much more than that. I figure out which program works for you best, and then we go through why. And I explain every different dimensions of different mortgage programs. We search out for the best rate in town for you. We search out what's the lowest PMI factors we can use, and all this stuff. So if you're in the business, you're a realtor, you're a mortgage person, you get what I'm saying. If you're an average consumer, I do much, 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 much more than mostly almost everybody out there, because what they're going to do is you're going to go online and you're done, and then you get into something. If I can get you a quarter or 0.3 or 0.4 or 0.5 better in interest rate, and also shave down your cost from 3 or 4 grand to maybe 5, 6, $700, your savings over the life of that loan is huge. So let's get back to this. So we saw these levels being hit. So I was like, okay, I'm going to start locking in on my clients. So then we hit here, and this was another trigger. So then I'm like, okay, something's going to go haywire from here. If you go back to my videos in the past couple of days, I expected a downturn, which we just got, and it's kind of extreme today. You can see this as we're moving through this video. Pay attention to this, and this. It'll move, not constantly. Every time something trades, this will move. So we're looking, it's between 16 and 19. You'll see that kind of moving. This is the U.S. Treasuries. What that's moving, that's the S&P 500. So again, what I'm just trying to explain to you is it was a bad day for interest rates. Why? Just the uncertainties in the world right now. There is nothing really that came out and said, here's what happened today, and it's bad. Inflation numbers came in and they were good. Let's go to the bond market, how that's trading today, and we're probably going to see we hit some levels there as well. Okay, so yesterday, this is the Fibonacci floor. Again, this, you might want to Google that as well. If you want to get educated in this, you're a realtor, you're a mortgage person, you're a financial person, these are things you should know. Consumers, if you're watching this, you're a home buyer, you want to refinance, things like that, this might say, this guy is a little more credible than the next guy that, or you just call somebody on the phone, or somebody's telemarketing you, or you just go to a website. So this is what I do for a living. So when we went below this trigger, or we hit this trigger, I started locking everybody because that was the floor. I'm thinking rates are going to bounce off of this. Okay, so we went down, we lost a little bit here, but now we're going back up. So again, I was trying to say, this doesn't move in a straight line. This is the bond market, and this is yields. Now we're talking yields here and not price, like we were talking about over here. All right, so you just saw that go to 19. That's even worse than 17. We don't want that to go down. It's killing us. So that's what's going on today. There's really not much in the market for news, but interest rates are getting pounded. So I'm going to try to make a more in-depth video and put that out there to explain again what mortgage-backed securities are, what the U.S. Treasuries are, what happens when the Federal Reserve comes in and lowers rates. So they lowered rates, but mortgage rates are going up. How's that make any sense? I'll make it make sense to you. So please, I hope you liked the video. If you do, please give me a thumbs up. I know this one might have been a little confusing. I'm trying to get a little more detailed with people that do follow the channel, but I also have to make it, also if somebody's just jumping on the bandwagon now, they kind of get it. So again, to recap things, inflation numbers were in line. Actually, they were better than expected, but the mortgage interest rates are jumping up today, probably about 0.1 to 0.3, depends on what lender you use. Hopefully you use me, because I kind of saw this coming, and we avoided this. We avoided this by locking in clients prior to this bump. So I hope you have a great weekend. God bless you. If I could be of any help, please reach out to me. You can reach me at 844-775-LOAN. That's 5626. Or reach me via email at dfrio, which is F-R-I-O, at parksidelending.com. Thanks again for watching. Have a great weekend. See you next week.